right, guys, welcome everybody. It is 10 a.m. I'm going to go ahead and start. I'm just double checking to make sure that I am recording this. I apologize. At last week's meeting, I hit the pause on the recording and I thought I'd hit the record again. And then after our meeting ended, I went ahead and tried to convert it over to the to my YouTube channel and found out that the whole thing didn't get recorded. So I think that was just my fault. I had the wrong button hit. So I'm double checking it right now. And so everything is being recorded. So again, after today's session, which ends again at 10:50, it will be recorded and then put on Blackboard for you guys to go back and review. Today's goal is I'd like to work through two of the problems in the textbook that cover everything in chapter 2, which is problems 2.1a and 2.2a. And what I intend to do is not only work the accounting equation with everybody, but also to show you how you prepare the financial statements after that. And I think after that, that's really a wrap on chapter 2. Just a couple heads up, right now the due date for the chapter 2 assignments is Sunday, this coming Sunday, which is September 13th. And unless there's any major hiccups today, if you have any major issues with your understanding of the materials, I feel like that's still a good due date. And so we'll just kind of wait the last few minutes of today's session. If there's any issues on that due date, we can talk about it. But my goal is to try to wrap up chapter 2 today, and then next week proceed into chapter 3 when we start to basically still do the same stuff, but tack on the rules of debits and credits and how that pertains to the accounting equation. All right, so I'm going to go ahead and share my screen. I did something with my Monday night class. I think it might be a little bit better with this class. Is I was able to get both the textbook problem and the template on the same screen. So I'm going to go ahead and do that with you. I think it'll make the transitions much easier. So it looks like I got 18 people in here right now. So let me go ahead and share my screen. And again, if there's any issues with you not being able to see it, let me know. But right now you should be able to see both. It should say problem 2.1a, and then you should see my Excel template. So if you cannot see that, let me know right now. That way I'll go ahead and adjust it again, but I believe I got it shared. So if you cannot see it, as I'm going to work, again, I got problem 2.1a pulled up here. I'm going to go through, there's 11 transactions, and I'm going to go back and forth and then kind of, again, practice with you on how these transactions fit into the accounting equation. And then I'll show you again the financial statements. So it looks like everybody can see the screen.
Yes.
I got it. Just let me know, send me a chat, let me know if you cannot see it. Check one more thing. I'm just checking my controls here. All right, so I went ahead. I'm just gonna go ahead and mute everybody just in case there's any distractions. If you have a question or you have something you want to say, you can always unmute yourself, but just so in case it distracts somebody else. So here I am on 2.1a, and as you can see, let me bring up my annotations here. As you can see, I've got my accounting equation already set up, and if you're just kind of starting this now, you've got that template that hopefully you printed it or you can write this out. But notice I've got the 4 asset accounts listed of cash, accounts receivable, office supplies, and equipment. And then you can see as I move it over, you've got the accounts payable, you got the capital account, revenue, expenses, and withdrawals if there's any. So we'll go through this here in a second. Let me get my mouse set again. All right, so we'll start with the first one. And again, I'm just kind of reading here on transactions. I got the page minimized. So again, if you're having an issue seeing it, let me know. So the first one says, the owner invested $200,000 in cash to begin the business. And like we said before, we look at what accounts are affected. We know cash is going to be affected, and we know capital. So if I go to my equation, I type in 200,000. So that's going to be an increase to cash, which is an asset. And then remember, the offset is going to go to capital. So we're over to the capital account, enter 200,000, and then that transaction is done. So and I think we've done that a few times, and hopefully you've been practicing. That one's pretty easy for you. But if not, let me know if there's any issues. So let me get to number 2, where we've got, and again, I'll try to make sure you know where I'm at. So number 2, it says paid $40,500 in cash for the purchase of equipment. So we know we got cash, which is an asset, and equipment, which is an asset, and the cost here is $40,500. So if I go over to my transaction row 2, think about what's happening to cash. If you're paying cash, cash would be decreasing, right? So I'm going to enter a negative minus $40,500 for cash, which indicates a decrease. That's in the brackets, the format, the bracket means negative. And then we go over to equipment and then simply enter a positive $40,500. So notice you're just shifting your assets. You're decreasing cash and you're increasing equipment. Very simple. Number 3, the difference between number 2 and number 3 is you're both buying equipment, purchase more equipment, but this one says for $30,400 on credit. So what that means is we didn't pay cash. It's like a short-term loan. So we're going to increase an asset by $30,400 and also going to increase our debt by $30,400, which will put that into accounts payable. So again, this is line 3. Again, I'll go to equipment. I'll put $3,400. And then notice I'll go over to accounts payable and enter the same thing. So you're increasing equipment, increasing an asset, and increasing your debt. Your equation is still in balance. That was number 3. Number 4. Now number 4, now it says you're paying our creditors. So now number 4, you're actually paying some of your debt. So again, paid, anytime you pay, that's going to be reducing cash. And then since we're paying our creditors, that means you're reducing your debt. So we're going to have 2 decreases on this one. We're going to, again, I'll do this for cash. Let me clear that. So for cash, we'll say.
I have a question.
Okay, go ahead. Question.
Or where it say creditors, because on number 3 it said credit. Is that gonna be still under accounts payable or accounts receivable?
Well, in this case, associate, if they ever say on account or on credit, and in the context it has something to do with you're buying something, it's going to relate to accounts payable.
Okay. So
if you see, like in this one, again, if I'm comparing number 3 and number 4, they're both related to creditors, but notice that it relates to something that we're actually purchasing. So we bought some equipment, but we hadn't actually paid for it yet. And on number 4, now we're actually going to make the payment, okay? And because this cash is going to be flowing out of the business, it's going to be related to accounts payable. If this was a situation, and we'll get down here to a moment when we get to number 7, where they say on account, but that's for revenue. We'll talk about how it basically flips, and we'll be talking about accounts receivable. But just to kind of remember, accounts payable is always typically associated with money that has to be paid out of the business, okay? So on number 4, let me clear that. What I would do then, so I'm on number 4, I'm going to put a minus 25,000 for cash, and then notice I'm going to go over to accounts payable and enter minus 25,000. So it's quite literally of that 30,400 that we had created in transaction number 3. In transaction number 4, now we're starting to pay back some of that. We're actually paying down our debt. So we're showing reducing the accounts payable, and you also have to show that you're reducing your asset, which is cash. So that would be number 4. All right. Now on number 5, it says the owner made an additional investment of $50,000 in cash. So this is just like number 1. So it's going to be the exact same accounts, except it's going to be a different dollar amount. So on number 5, we'd say, let me get my mouse back on. 5, we'd say cash, increase 50. And then I'm going to go over to capital and say increase 50,000. So that's just like transaction number one. So at this point, I hope you're starting to see there is a lot of repetition here in that, you know, once you've gone through a few of these problems, which will be very similar if you haven't, if you started your homework and you've been practicing, it's really reading it. You know, accounting is a language. You're getting used to reading how they write the words and how the business people, how they perform, how they link their sentences. It's not like everyday English. It's not like everyday conversation. It has its own unique little flavor to it. So it's just a matter of getting accustomed to the language. All right, number 6. Okay, so now number 6, I'm going to kind of do these side by side. 6 and 7 are both performing services. All right, and I believe we talked last week. I know we only met on Monday, or last Wednesday. Last week, I believe we talked about anytime you see performed services, think revenue. You're earning revenue. And there's 2 types. It's either going to be direct cash now, or it's going to be on account, which means we'll get the cash later. It's all about timing. So we'll start with the first one on number 6. We've got, making sure, $19,500 in cash coming into the business for services that we have performed. So you go to your item, you'd say increase cash, 19.5, and then go to revenue and say increase 19,500 revenue. All right. Now, same thing on 7, and then I'll stop and see if there's any questions. 7 says same thing, perform services. It's 15.6, but on account. So I'm going to go accounts receivable, 15.6, and then put the other one again. It's the same thing. It's still revenue. So just to kind of do these, it's nice they did them back to back. Are there any issues or questions on the differences between those two? You've got cash revenue and then accounts receivable revenue. The idea is sometimes you can earn the revenue, perform the service, and then basically the customer will say, I will pay you later. Which, you know, there is risk to that, but that's part of business. You know, that's why you have credit. But are we okay with 6 and 7? Those are the only 2 types you'll see in terms of revenue this whole semester. It's either going to be cash or credit. Are we good? Well, and then later on, we'll see this. I think it's on transaction number 9. At some point in time, we should start to collect some of that 15,600. It'll start to come in that the customers will start to pay us. All right. Number 8, paid rent expense, 12,000. You'd say reduce cash, 12,000. And then for now, I always put a minus for the expenses just to make sure you know that that's going to reduce equity. So a minus 12,000 expense and a minus 12,000 cash. Okay. Now, number 9, this is the one I referred to just a second ago. On number 9, we've got received $11,000 in cash from credit clients. So I think somebody asked again this word credit, right? Credit clients. Well, this credit clients would simply be the customers who owe us money. So if we received $11,000, again on transaction 9, we know cash is going to be increasing, and then we have to offset that with something else. And in this case, we're going to offset it with a decrease to accounts receivable. So what we'll do here, on 9, I'll put 11,000. And I guess let me change my fonts and how my font's off. Let me change that just a minute. Fix that. All right. So we've got 11,000 cash, and then I'm going to say minus 11,000 accounts receivable. Now, the most common mistake on transaction 9 that I see is that a student will say, they'll see something where it says receive 11,000, or they'll say receive cash from a credit client. They'll put 11,000 as an increase to cash, but they will mistakenly increase revenue. It's all about timing. This one is simply just a collection of your accounts receivable. The revenue has already been recorded. And so at this point, this is if the accounting transaction is simply just collecting on that revenue. So you don't want to put that, 11,000 again in the revenue, or it's kind of like you'd be double counting your revenue. Okay. All right, there's 2 more on this. Number 10, you paid for some office supplies, 15,100 in cash. I'm going to put a minus 15,100 to reduce cash, and then go over to office supplies and put an increase of 15,100. So again, this is just a shifting of your assets. You're increasing one asset and reducing another. Okay.
And then the last one, and then we'll get to some of the diagnostics with this thing. It says the owner withdrew $24,000 in cash, but it says for personal, anytime there's a personal withdrawal, we're going to put that under a category called withdrawals. So on number 11, I'll put minus 24,000 cash, and then I'm going to go over to withdrawals and put minus 24,000. And remember, withdrawals is going to act like an expense, meaning it's going to reduce equity. But later on, I will show you
in a minute here, it does not go on the income statement. So it's a personal withdrawal. So we still have to show it coming out of the business, reducing equity. But when we get to our financial statements, I'll show you where you put it on your financial statements. But at this point, I'm going to pause here for a moment. These are 11, I would probably say, very common types of transactions you'll see in the upcoming chapters. But are there any questions or issues on any of these 11 transactions that I just went over? And then if not,
in a minute, we'll look at the equation in total, and then I'll show you how you transfer that to the financial statements. But are there any issues on anything that I just showed you? Any struggles you're having with reading any of these problems? Anybody? And there may not be. If you guys are getting it, that's great. All right, I don't see any hands up. I don't see anybody asking, so it sounds like you're getting it, or at least for now. If you think of something that comes up later, just let me know. But let me show you something there. So I've got the equation, and notice I went ahead and have the totals already added up for you. All right. So every column has been added up. So let me show you that this equation does indeed balance. So if I add up my assets, you're going to get $254,500 of total assets. So now if I want to add up all my liabilities and equity, it's going to net them. I should get the same amount, and you notice that I do. So I get 254.5. So notice that 254.5 of your total assets equals your total liabilities and equity. All right, so just to show you here that your equation is in balance. Now, before I get to the financial statements, just want to say one thing. It looks nice, yeah, we're balanced, but later on we'll talk in upcoming chapters to the fact that just because you are in balance does not always mean that everything is correct. Okay, because you could quite often have everything balanced, but you could have amounts in the wrong accounts, or you could have increased or decreased the wrong accounts, meaning that your equation still balances, but there could be some errors. And if that does happen, and that happens a lot, even in industry, it can mess up your financial statements. But I can tell you pretty sure on this one, everything is correct. All right. Okay. So where do you go from here? So this problem stops here. In fact, the only thing else this problem asks you to do, it says, if you can read this at the bottom of the problem, it says, what is the ending balance of cash after all transactions have been recorded? And so all I did was I just netted everything up. If it's an increase, it's a plus. If it's a decrease, it's a minus. I netted them together. Your balance would be 163.9. But what we're going to do here is I'm going to take all these accounts, and let's show you how you would then transition into your financial statements. So I've got this set up. So let's go over and take a look at it. So notice, here we have, we'll start with financial statement number 1. Remember, your first financial statement is always your income statement. Note that all your financial statements always have a date on them, title, and it says for the month ended July 31st. So it tells you what time period. You always have to have dates in your financial statements, just like your equity statement, again, for the month ended. So just watch out for your time periods. Now, so on the first one on your income statement, the only thing on the income statement, it's a summary of revenues and expenses. And so in this problem, we'll go to our accounting equation. We move over. you'll notice we've got, I'll highlight these, we've got $35,100 of revenue and $12,000 of expenses. So these two items would be summarized on your income statement. That's the first thing you always do. And so let's go over there. Let's essentially just take these amounts. And we've got $35,100 of revenue. And again, let me get my format. I thought I had that set up, but let's change that. All right, $35,100 revenue. And your expenses is a minus 12,000. So if you take the 35,100, subtract out that 12,000, note that you now have net income of $23,100. That's our first step. Now, this amount is now going to be transferred to the equity statement, and you're going to add net income to your equity. Okay, so your net income, or if it were a net loss, anything from your income statement will go to your second financial statement, gets transferred over. So let's do that.
We'll start with your capital. And because I believe they just started the business, we're going to put zero.
Zero is our beginning balance. We're going to add the $23,100 of our net income. Again, let me get my format there. And then the investments, just go to your capital account. We had $250,000 of investments, $200,000 to start the business, and they made another $50,000 of an additional investment. So total investments looks like it's $250,000. Now withdrawals, there it is, $24,000 is also going to be subtracted. I'm going to put that there. And so to finish this financial statement, we just would net the positives and the negatives, and you'd get an ending capital balance of $249,100. All right. So again, let me get my arrow back on. So again, the net
Income gets added. We went and found our investments, which is a positive $250,000. We add those two, and then we had a withdrawal of $24,000. Now note, I said this earlier, the withdrawals act like an expense, but they are only summarized on the equity statement, okay? The withdrawals do not go on the income statement. They only go on your equity.
That's the only place you're going to find it. All right, now, once
You've done this 249.1, that's going to be the balance that's going to be on the balance sheet. So your third financial statement, got this down below, which is your balance sheet. I'm going to go ahead and plug in the 249,100. Again, let me
get my formats, my dollars formatted for you so it's easier to look at. There we go. Now, the rest of it, let's just go back to our accounting equation. Remember, your balance sheet has your assets, your liabilities, and capital.
Note that it
also has a date. It's the one financial statement that just says one date.
date, one specific date. It doesn't say for the month in it or for the year in it. It says July 31st. So that's something to note. But we're just going to go to our accounting equation and list our assets, our liabilities, and let's see if we balance. So remember, your balance sheet is quite literally your accounting equation, which we know doesn't balance. Unless we copied something over, we should be fine. So let's go up. We know cash is $163.9. So I'm just going to plug that in. $163.9. That's our cash. Our accounts receivable looks like it's $4,600.
My office supplies looks like it is $15,100. And then finally, the equipment, which is $70,900. All right, so bad. Yeah, so essentially, we just copied the equation over. We're just listing them. This is your balance sheet. Accounts payable is your only other item we don't have yet, which is $5,400. And then you look at this, we do balance. If you look at everything, notice We've got total assets of 254.5, and then we took the liabilities of 5,400, added the capital of 249.1, and notice we got the same number. We would have known if we messed something up in either the income statement or the equity statement, if we transposed a number or did something weird, we wouldn't balance, and we know there'd be an issue. But at this point, everything looks good. We've got a balance sheet that's listing our assets, our liabilities, and of course, this is your updated capital number, and this is for July 31st. Okay, so that's how you do it. And typically the way a business or an entity reports their financial records is most of the time they do a monthly financial statement, but then you could also do quarterly, where you might do a summary of 3 months in a row. You could also do 12 months in a row for a whole year. Most corporations would call that an annual report, and you look at the whole year's financial records. But essentially, this is how accounting systems work. Every system is based on that fundamental accounting equation. Yeah, these are pretty simple types of problems, but it's not about that. It's just to show you this is how a system would work, okay? And you have to remember that, you know, with technology, it can do so much for us. Technology can summarize a lot of these daily types of transactions very easily. It's the thinking part. It's where eventually we'll get to, I'll show you there's certain types, you know, of accounts that you have to make some adjustments, and there's certain things you have to use, you know, a human judgment that the computer can't always do for you. The point is you need to understand this stuff. You have to understand how to address it. You have to know how everything's related to be able to make decisions and fix things and so forth. But this is how it works. All right. So again, this is problem 2.1a. Again, I took it one step farther. I took it to the financial statements just to show. I think it's good to tie that together. And I'll do that again on problem 2.2a as well. But are there, I'll pause for a moment. I'll check it out. Are there any issues or questions from anybody on anything that I just showed you? Anything that you're looking at that you're not seeing? Let me know if we're good. Well, in any case, you know, I am recording this, so if you can always go back later on today and review everything I'm showing you right now. Okay. All right. So let's do this. So this is problem 2.1a. Now I want to show you a different one. This is problem 2.2a, and there's one thing that's a little bit different that we haven't seen yet. Of course, this says analyzing, you know, the effects of transactions on the accounting equation. We're going to do that. But I want you to see here in this particular problem that they give us the accounts and they give us numbers, balances that are already associated with these accounts. So in a moment, when we go to the accounting equation, I'm going to call these numbers beginning balances. And so then what we'll do is once we have these beginning balances, once we go through the transactions, we're going to be updating these balances to get an ending balance, just like we just did. So we'll have beginning balances, and then everything else in the problem should seem fairly similar to what we just did in problem 2.1a. All right, so here's problem 2.2a, and I'll give you a moment if you're just writing this down, but you'll notice at the top here, I've got 4 asset accounts set up, and you'll also notice I've got the beginning balances entered just from the problem. So these balances of 144, 37, 85,000, and 55,000, notice we've got beginning balance. These are the balances that we're starting with. We've then got accounts payable. I went ahead and entered that as the beginning balance. And then notice we've got capital, you've got revenue, and then you've got expenses. So as I move this over, you can see that I've got all my beginning balances set up. And notice that I put the expenses, I put those in as a minus, okay? And the reason I did that, if you look at the bottom here, just to show you, all the assets adding up right now are 321, and then all my liabilities and equity, if you add those up, are at 321. So just to show you that we are in balance right now, okay? So the only thing then that's left is to now go through these transactions, and we've got 10 of them, and then we're going to enter these into the equation, and then as we do that, all these balances will update, and then we'll actually then do the financial statements as well. Okay, so to start,
be on number 1. And at this point, you should see some familiar terms here. Here we go again. Perform services. We've seen that already. It says for $14,400 on credit. So I'll pause for a moment. I'll let anybody, if they want to answer this. So can anybody give me one account that would be affected on this first transaction when you perform services on credit? What's at least one account item that's going to be affected? Anybody?
Accounts receivable.
Accounts receivable, very good. So will you say increase or decrease to your accounts receivable?
Decrease.
It's not decrease, it's going to be increase. And the reason it's going to be increase is because they have not paid us yet. It's like you went ahead and performed the service. So, you know, if you're talking about the customer that we just performed the service for them, if it's a business, for them, it would be accounts payable because they owe us, okay? But because on our side of the transaction, because somebody owes us money, we're gonna enter that in as an increase to accounts receivable. Does that make sense? Or does that not make sense? To anybody? Notice then I would go to the offset, and it's gotta be, if we're increasing accounts receivable, I have to either be decreasing or increasing something else. And we all know at this point, if you see perform services, you should all say what?
Revenue.
Revenue. So there you go, 14,400, there you go. Very simple. All right, number 2, we paid for some new office chairs, $36.40, right? So guys, again, just about every one of these transactions is gonna involve cash, just so you know. So on number 2, paid cash, everybody's gonna say cash is gonna do what? Is cash gonna increase or is it going to decrease?
Decrease.
Decrease, everybody say decrease. I would say decrease as well. And then office chairs would most likely be under office furniture. Would you say office furniture should increase or decrease? Anybody?
Increase.
Increase.
Increase. There you go. So here we go. We got an increase to furniture and a decrease to cash. Okay. Number 3, received $27,600 in cash from credit clients. And we've seen this before. We're receiving cash from our credit customers. So cash should be what? Increase or decrease?
Increase.
Increase.
A couple of people say increase. I'll go along with that. I'll say increase. And again, as we're going through these, if you're stuck, if you're seeing it a different way, let me know. Increase cash, so I have to offset that with something. Am I going to increase or decrease something else? What would be the offset? Anybody?
Account receivable decrease.
Everybody concur? Anybody not concur?
Yes.
There you go. So notice in this case, you're just collecting from your accounts receivable. And the tendency for anybody making a mistake on this one, I've seen with students in the past, is again, when they see receiving cash, they think that the offset should go to revenue. Just remember, the revenue has already been reported. All right, number 4 says you paid $18.20 in cash for telephone service. Well, we know cash is involved. And of course, if we're paying cash at this point, just like number 2, you'd say
Decrease.
Decrease. So I'll say negative $18.20 to cash. In this case, the offset's not going to go to accounts receivable or furniture, but because telephone service would be classified as what? Anybody know?
Expense.
It's an expense. So I'm going to go ahead and put, anytime for now you see expenses, just put a negative in there. Just make sure you put a minus, meaning that that's decreasing every time. Okay, that's number 4. Number 5, sent a check for $10,400 in partial payment of an amount due creditors. So we're paying our debt. It says send a check, so what? That's still cash. So if on number 5, just like before, you paid, you paid money, we know cash should be
Decrease.
decreasing. I put minus 10,004. And then in this case, I offset that with something. Does anybody know where the offset's going to go on that 10,004?
Account payables.
Okay, and would you say, Ibaka, would you say accounts payable is going to increase or decrease?
Decrease.
Decrease. Anybody else? Questions on that one? Minus cash 10.4, minus accounts payable 10.4. Okay, reduce our debt. Notice we didn't pay all of it. We had owed 30,600, but we paid 10,004 because most likely is that accounts payable, you know, most likely represents various creditors that we owe. So we're paying some of our debt, and of course we have to reduce our cash. Okay. Now let me pause here for just a minute. If you notice, since I've got the accounting equation pulled up, if we stopped right here, you can see what our cash balance would be. Notice we've got right now 155,740 in cash in the bank, you know, because this is going to be a continuously changing number with cash because money's always coming in and out of the business. So just so you know, right now, if we stop right here, this will be our cash balance. We got cash coming in and coming out, and any type of computer accounting system, you can typically always check your cash ledger. We'll get to ledger later over your cash balance. And you know, quite honestly, you know, this isn't always real time with your bank, because if you've ever done online banking, we all probably do that now. You can deposit money now or pay money now, and sometimes it doesn't always reflect in your account right away. All right, 6, paid salaries, 21,160 in cash. So I'll go to cash, and you should all say cash should what? Increase or decrease? Anybody?
Decrease.
Increase.
Decrease.
Decrease. Are we all saying decrease? Number 10 cash should be a minus. And on this one,
Expense.
it looks like it should be, Ibaka said expense, so I'll go to my expenses. Make sure I'm in the right row here. It's number 6. All right. So yeah, paid cash 21,160, and then minus expense 21,160. That's number 6. Number 7, and now as you can see, they're kind of starting to use some of the same terms. Notice number 7 says sent a check, just like a number 5 says sent a check. So number 7 sent a check to pay the electric bill. We know that's going to be cash, and electric bill isn't telephone service, but it's going to be the same category. So we should know that we've got what? Cash, and then the offset would go to
Expense.
expenses. So number 7, I'll put minus 2570 in cash, and on my expenses, same thing. At this point, every time you see an expense, just always enter a minus 2570. Okay. All right, that was number what? 7. All right, number 8, and you've seen this one before. 8 is very similar to number 1. It says perform services, except number 1 was on credit. Number 8 says cash. So we'll go to the transaction line 8, and for cash, you should all say what?
Increase.
Increase.
You got it. So cash will say 25,800 increase. And then just like number 1, we'll go to revenue and put that increase of 25,800. So that would take care of number 8. All right, 2 more on this one. Number 9 says we paid $53.20 in cash for auto repairs. So we know cash. So for cash, we'll say, just like anytime we paid any money, we know cash should be
Decrease.
increasing. So we'll say minus 5320, and here my font's off. Hold on just a second to fix that. But we'll decrease the cash. And then the offset's going to go to what?
Auto.
Is it auto? Does everybody say auto? Ask yourself this. Auto is an asset, right? In this transaction, did they just buy a new automobile?
No.
Nope. So what are they doing then?
Repairing.
Comparing it.
So does anybody think, what category would we put repairs under?
All.
I
Accounts.
hear somebody saying expenses.
Yes.
Yes, it should be under expense. And don't feel bad because a lot of people do this the first time they see this one. But this is considered kind of like maintenance expense, repair and maintenance expense. Okay. So if they had said paid $53.20 for a new automobile, then yeah, you would have put it into auto. But in this case, you're just paying for your repairs on it. So it would go under an expense category. Okay. So you have, again, let me get my arrow off there. You would have the minus cash going out. And you wouldn't put it as an increase to auto, but you put it as a decrease to an expense. So be careful with that. It specifically says auto repairs. It's just like anything, businesses have maintenance type of expenses. Okay. All right, last one. It says perform services. Now again, they're changing the wording. I want you to contrast these. Look at number 10 and number 1. They both say perform services. Of course, the amounts are different, but notice the number 1 says on credit, and on number 10 it says on account. Well, guess what? That means the same thing. So they're showing you different ways on how they write these wordings. So you just have to kind of get used to, again, the language. So on credit or on account for perform services is going to mean essentially the same thing. So on account for perform services, everybody should say what asset account? Accounts receivable. We'll put that amount there. Of course, it's an increase. And then we know perform services should be the revenue. So if I do that, because this is number 10, right? So we got 27,600 increase. And then 27,600 increase. There you go. All right. And that would take care of all the transactions 1 through 10. We just entered all of them as pluses or minuses, meaning increase or decrease. We already had the beginning balance in the equation. And at this point, because I already had the formula set up, everything has been totaled for you. We know our total assets of cash, accounts receivable, office furniture, and auto total $347,530. And then our offset should be the same. And you'll notice if we add up our liabilities and our 3 equity items, notice we get the same amount. Okay. All right. So for a moment, any questions or anything at all on any of this transaction problem that I just went over on just the accounting equation part of it? Are we okay? To me, probably a better question would be like, if you haven't taken the quiz yet and you had to take the quiz right now or do the homework, how would you do? And if you're asking yourself, I think I got it, then you're in good shape. If you need more practice, that's what we're doing right now. All right, no questions? We're good? Okay. So this problem then says, of course, the only other question in this problem was, what is the amount of total assets after all transactions have been recorded? And of course, we just said $347,530. All right, now, same thing, just like the other one. Let's go over and let's put together the financial statements. So you notice we've already got these set up. So we've got income statement, equity statement, and balance sheet. And again, this is being recorded, so I know if you're trying to write fast, you may have to rewrite some of the stuff. But again, let's just plug the numbers in. I want to make sure you see what the net income is. So for revenues, it looks like we've got $199,400 revenue. And again, let me change my font, my formatting, so it's easier to look at. And expenses is a minus 86,570. If I move these, we've got net income right now of $112,830. Okay, so kind of bear with me. So that's your first financial statement. We know that number, this amount, added to your equity, along with any other investments. So on this one, the one thing that's going to be a little bit different, let me show you this. is you'll note that we already had a beginning capital balance. See that 214.5? We had a beginning balance. So that's going to be our starting point for this month. So 214.5 will be our beginning balance. Add the net income, and there were no withdrawals.
So that was it on your equity. So if I net these, we get ending capital to be right at 327, 330. And
That should be the balance, the 327, 330. That should be the balance on your balance sheet. All right, so let me format that so again it's easier to look at. All right, our accounts payable was 20,002. So I'm just going to plug that in right here, 20,200. We got that, and then the rest of it, we just have to list our assets from the equation. And so we go back, and we've got cash. Let's go get our cash balance of 152,490. Cash. Accounts receivable is 51,400. Got office furniture, which is 88,640. And then auto, which was 55,000. Again, I'm just pulling these right from your equation. So let me net these up. And we get 347,530 as your total assets. And then let me add up your equity and liabilities. And we get the same number. Notice that we balance. Now, if we had any issues where these two numbers didn't balance, if we had something off here, then that just means I did something wrong either in the equation or back on the income statement or the equity statement. But at this point, it looks like all the numbers have been transferred appropriately, and this is what your balance sheet would look like. Now again, we're not even getting into the analysis. We're just saying this is how you prepare them. Later on, we'll do a little more analyzing, we'll do some comparing and see how well is the company doing. But this is the steps you would take in an accounting system, at least to start with in Chapter 2 to prepare your financial statements. Okay. Are there any questions on what I know I kind of went through these last two pretty quickly because I'm just going to watch my time, but are there any questions on either the income statement, the equity, or the balance sheet? Anything I just showed you? All right, if it seems good, that's awesome. Now, so again, I've got 2 minutes to go, but I wanted to make sure I reported each of these two problems with you, so that way you've got something you can go back this week and review. So where I'm at right now is that's the essentials of Chapter 2 of the equation and how you get to the financial statements from the equation. You've got Connect homework that is due Sunday, which is the 13th. I can't believe we're already saying September 13th, but it's due on the 13th. I feel like I've shown you enough. If there's no question, I think that that's still a pretty good date to stick with. Your Chapter 2 quiz is also due by Sunday. This lecture will be downloaded into Blackboard later today, so if you need to, you can always go back and review it. And of course, you've got all my homework and other illustrations in Blackboard that you can look at as well. But unless there's any issues or questions, any hiccups you're having, there's no issues. I'm not going to update. Go ahead and leave the date as is. I always have an option. If it feels like you're not getting something and you need more help, just let me know. But I feel like the 13th, I know the Labor Day always throws us off with missing that Monday, and then now we're basically already done for the week in terms of our sessions. But I think, other than the Thanksgiving week, I think we always have the Monday and Wednesday. But questions? We're almost at 10:49. I know some of you may be having an 11 o'clock class, so I don't want to
hold you over, but I'll stick around. But if there's nothing, so a couple things, and I'm double checking this is being recorded so I didn't mess something up. Don't forget the due dates on your Connect assignments. I'm going to go ahead and post in there another announcement up in the Blackboard just to remind you what needs to be done by Sunday. And then to kind of give you a heads up, next Monday, I do plan on beginning chapter 3, which is
Pretty much the same type of transactions. We're still going to be looking at accounting equation concepts, but we're going to add the concept of a T account in the debit and credit rule. We'll get more rules. We're just basically adding on another layer of rules. That's what's coming. But for now, don't worry about that. I want to make sure you get the fundamental stuff down in chapter 2 right now. All right, so if you need to leave right now, that's fine. I can hang on here for a few minutes if you have any specific questions on anything I just showed you. If there's nothing, I'll go ahead and wrap it up here in a minute. But at this point, I've shown you basically 2 comprehensive problems that cover everything that you need to know, at least from in here for chapter 2. But anybody? If we're good, I'm not hearing anything. I got 10 people left in the room. We're okay?
Yes.
Okay.
Now I have a question. It's in them chapters. I haven't looked at it yet. But in the book, will it just give us, because it's like I'm confused on the wording. It's throwing me off. Like the perform service, I need to probably write down like the perform services definition. I need to know that is increase,
Well, it's going to be the reason it's revenue is that the companies, the businesses that we're looking at are essentially service type of industries. What they didn't really specify in this problem, maybe it's a tax service. It could, since it's an accounting class, it could be maybe it's a haircutting, maybe it's a nail salon. I don't know. But everything in these problems so far is going to be a service type of industry. If this was a merchandising type of company, they would be saying they sold some merchandise, and that would be. But for now, they're just focusing on service. So anytime they say perform services, just you need to be thinking revenue. I don't think they word that any other differently. The only thing the thing that they mix up sometimes is they'll say, like they did in this problem, where they'll say they said perform services either on credit or perform services on account, which means the same thing. That's just how they do it. And so just to kind of reply, yeah, you just got to practice them. And I think as you do the practice, you'll see the repetition. It just, they always say just practice, repeat it over and over, you'll get it. That's quite literally with accounting. You just, the more time you spend on reading it and practicing the problems, it'll just become the second language to you. All right. I don't know if that is.
I had a question just on Excel.
Yeah, Mike. On what?
Just Excel. I have a Mac. I don't have it downloaded on my computer. Does your class offer Excel?
I mean, can you get it for free?
Yeah, I just didn't know how, like, with homework, are we gonna have to fill out like our own Excel spreadsheet?
Oh, no. I'm just
Turn that
using
into you.
I'm just using this as a way to show you how to work a problem. To me, since I'm not in front of a whiteboard,
Okay.
What I did was I just created this template in Excel, just for learning, so you know what accounts are being increased or decreased. Yeah, you're not going to be tested on how to use Excel at all, because to me, should you know how to use Excel? Absolutely, but because that's not a prereq for this course, to me there's enough stuff to learn with just the accounting rules. I don't require it, but I always say off the record, take a couple Excel classes, get used to it. If you're going to go into business, accounting, industry, anything, you're going to be using it. Every company uses Excel. But for now, yeah, I'm just trying to show it to you guys just in terms of just the learning aspect. I'm just using it as
black and white.
Does that help, Mike? Now,
yeah, I was just wondering, because I was going to say, is there a template that is going to be given to us?
Well, you don't have
have to
Excel
use
on
it.
your computer?
No, I haven't downloaded it yet.
Yeah, Go
I
to,
have
all you
a-
gotta do, if you go, I think it's, you gotta log in, go to the Microsoft store, Microsoft.com, and I think there's a link on there where if you're a student, I think if you type in your student email, you can download all of the Office 365 products. I think they let you do it up to 5 different devices. And I know you can do it for the Mac too. So it's not just the Android devices. So you should be able, if you want to get in and actually open up these templates that I put out there, you have to first download Excel onto your computer, and you can get that for free.
Okay.
Cool.
Well, that's all I had.
All right, cool. Anybody else on anything? All right, I got 5 people. All right, so let me wrap this up. We'll see you next Monday. Everything here will be posted later on Blackboard. Again, have a good day, guys. And again, email me between now and let's say Monday or whatever. If you have any questions or issues, let me know. I'd be glad to help. Gubaka, are we good?
Yeah, I'm good.
All right. Okay, guys, I'm going to go ahead and end it. All right. Have a nice day.